Hi everybody, welcome to our DAT IQ weekly market update. This is our update for July 30, episode 302. I'm Dean Croak, market analyst here at DAT Freight and Analytics, along with co-host Chad Kennedy. And special guest today is Scott Connell from Travellers Insurance. Welcome, guys.
Hi, good morning. Thanks for having me.
Yeah,
morning.
Good to have you with us, Scott. Tell us a little bit about yourself and what you do at Travellers.
Sure, I am the National Practice Lead for Transportation here in the Inland Marine Division for Travelers Insurance, and I also have a background, roughly 29 years in cargo theft investigations and supply chain security.
Fascinating subject. I was the victim of a failed cargo theft attempt in Australia in 1986. Believe it or not, some bad guys wanted to steal about $1 million worth of VCR recorders in a refrigerated van. They didn't succeed, but it's a very real problem. I'm glad we've got you on the show to talk a little bit about this. Chad, what's happening in your world?
Yeah, Dean, I've been noticing a new metric out there that could be a signal on demand. It's called the SAHM metric. It's spelled SAHM. It's a recession indicator. It takes the moving average of the last 3 months of unemployment and compares it to the minimum of the prior 12 months. And if we get the expected unemployment numbers this Friday, 4.1%, it would tip it into kind of like a red alert phase. It's been pretty reliable over the last several recessions. So one of many metrics to watch could be a signal on future demand.
Yeah, and maybe cargo theft too. We'll get into that a little bit later with Scott.
Right.
All right, so let's dive into our market update. We'll do a quick market update today. Don't forget the long form version of today's report will be available this evening. Just go to dat.com/market update. All of the charts and graphs and associated commentary will be there for you to download. Some of the key trends we're watching this week, dry van spot rates down slightly, but identical to last year, as you'll see from the chart, but reefer and flatbed continue to lose ground. There are signs that the peak shipping season of imports is early. We surmised that might have been the case last month. Ocean rates are dropping after 2.5 months of increases. It's likely also due to the pull forward of a good share of peak season volumes a little bit earlier to account for longer lead times due to the Red Sea diversions and possible disruptions on the US East Coast with the labour disruptions there. We just had some earnings calls come out in the last few weeks. CEO Adam Miller from Knight Swift noted that there is more capacity attrition required for a cycle upturn. A return to seasonality in the second half could lead to a positive setup for the 2025 truckload bid season. A lot of the truckload carriers reporting believe there is a market inflection, a turning point in spot pricing is drawing closer, but admit it's not there yet. The ATA tonnage index confirmed some of the softness. The industry resumed a downward trend year over year. In the June numbers, the index was down about 0.4%. It ended a short-lived increase. We had about 15 consecutive months of year-over-year losses prior to May. We've now got another year-over-year loss in the books. In this week's market update, we're looking at the impact of drug testing and the proposed changes to declassify marijuana as a controlled substance and how that might impact truckers. We're also looking at the latest truckload ton-mile index from Jason Miller, the National Cherry Festival season in Michigan, and more on the ag machinery industry layoffs and factories moving to Mexico, impacting Midwest specialized carriers. So there's some of the trends we're watching. On last week's data, the load-to-truck ratio on dry van volumes were down 2%, but about 12% higher than levels in week 30 over the last 7 years, excluding the pandemic-impacted years of 20 and 21. Equipment post down also, load-to-truck ratio at about 4.06. Interestingly, that's the highest load-to-truck ratio for week 30 in 8 years, except for 2020 when it was 4.23. In the refrigerated sector, the volume of load postings was down 3% week over week and 14% year over year, likely due to a slower week reported by the USDA in produce volumes. Those volumes were down about 8% last week compared to the prior year. A lot of softness in the produce market we'll talk about when we get to our forecast. Load-to-truck ratio down slightly to 6.35. In flatbed, load post volumes were down 5% last week, about 37% lower than the week 38-year average, excluding the pandemic years. So a lot softer in the flatbed market. Equipment posts were down also. Load-to-truck ratio down slightly to 11.9. It's identical to this time in 2019. Having a look at our spot rates, after dropping a penny per mile last week, line haul rates have decreased by 6 cents a mile in the last month. The national average dry van rate now stands at $1.64 for last week, almost the same as last week, as you can see on the chart there. After remaining flat in the refrigerated market at around $2 a mile for the last 2 weeks, the national average reefer line haul rate dropped 5 cents a mile last week, at just under $1.96 a mile. Line haul rates are about 3 cents a mile lower than last year and 2 cents a mile lower than the 3-month trailing average, most likely due to the loosening of capacity we're seeing, driven by some of the lowest truckload produce volumes for last week in 10 years. Volumes are down 13% last week. A lot of softness in this market. I'm watching a trend very closely here, and that is the fall off after Independence Day. Last year, produce volumes decreased by about 11% in the 3 weeks after July 4. This year, volumes have plunged at 26% over that time frame. And in flatbed, line haul rates dropped 2 cents a mile last week, averaging just over $2 a mile, excluding fuel. They're about 4 cents a mile lower than last year and about 7 cents a mile higher than 2019. Onto our short-term forecasts. These are our short-term forecasts for loads moved over 550 miles. They go out 35 days. Our flagship model is in green. It represents a lot of the longer-term seasonality. The red is the short-term model. That more heavily weights data seen more recently, and the yellow and grey are blends of the two. So let's start with dry van. Ratecast in green is holding the line with rates forecast to be flat around 823. So out about 3 weeks, they're forecasting rates to be flat and then gradually increasing by about 3 cents a mile by the end of the 35-day forecast range. Ratecast is a little bit more pessimistic, the short term is a bit more pessimistic, reflecting a 6 cent per mile decrease over that same time frame. And I think based on what we're seeing and hearing in the market, the blended models for dry van are a more likely scenario before we build momentum in August ahead of Labor Day and retail shopping season. So I'm going with the red ratecast model as sort of the pessimistic model, but maybe the grey is closer to the money there. The reefer model is more positive, and all of those models are in agreement. They're seeing an increase in spot rates in the next month, I think reflecting some of the exodus of capacity we are seeing in the market. Ratecast is expecting a 6 cent per mile increase out to 830. With the softness in the produce market, I'm inclined to agree with the short-term forecast with rates flat out 35 days. And on the flatbed, we're now seeing the forecast range reach the time of the year where flatbed rates typically flatten after dropping fairly aggressively from the second week of June. You can see ratecast seasonality starting to flatten out there towards the end of the forecast range. Now, depending on the impact of hurricane season, ratecast could be accurate in this case as it was in 2017. But based on the softness in the flatbed market, I'm inclined to agree with the more pessimistic short-term model in red this week's forecast. So over to Chad to have a look at the shipper contract market.
Yep, thanks, Dean. So as a reminder to our new listeners, everything that Dean covered before is from a broker to a carrier perspective, primarily on spot freight. So this will be a shipper perspective. So in this first chart we have here, the weekly shipment volumes for vans. So the blue area chart on this graph going back to 2017 is the contract shipment mix, currently at 77%. And the inverse of that in yellow is the spot shipment mix. So we are currently at a 23% mix of spot shipments the week starting 7/14. And so that's getting pretty high. It is signaling that the market has been tight in July so far, which is not a surprise for the seasonality that we've seen. And June did shape up to be the highest metric result we had since March of 2023. So a nice 1 year mark there. The spot premium ratio, which measures the difference between spot rates and contract rates. So this is a signal of is the market tight or loose. Spot premium ratio is at -5%. You do see some recent trend up there and tightening in the market. As this starts to go above 0%, that is a signal that the market has flipped. So let's go on to our next graph there, which is the temp control. Similar types of trends there, 23% on spot shipment mix and spot premium ratio at -5%. And then on to flatbed, see a totally different pattern here as we would expect from flatbed with more short-term lanes, seasonal lanes. Spot mix currently at 39%, spot premium ratio at -8%. That's a wrap on the shipper side.
Thanks, Chad. All right, so let's get started with our guest of the week. Question of the week for you, Scott. Cargo thieves are getting progressively sophisticated. What's the latest trend shippers, brokers, and carriers should be watching for?
So we've seen a big increase in the sophistication that the cargo thieves are using, and a lot of that is due to the fact that about 2 to 3 years ago, cargo theft went from these small domestic, rather unsophisticated cargo theft rings that were doing primarily straight theft, meaning they would physically go out straight to the freight, steal it where it's at, to these larger international rings. And these large international rings are sophisticated because they are soup to nuts organizations. They have their own call centers. They have their own supply chain built. They have boots on the ground where they need them to be. And so they have a bigger demand because they are working on a global basis rather than a small regional domestic basis here. So that's why we're seeing some of these increases and the increase in sophistication. The two most common methods we're seeing, the most common method that we're seeing right now, is they will steal the identity of a legitimate carrier. They will pretend to be that carrier. They'll get booked on the load. Once they're booked on the load, they then turn around and pretend to either be the freight broker that booked them, or they just pretend to be a freight broker. They then call a legitimate carrier and ask that legitimate carrier to go pick up the load. That legitimate carrier has no idea that they're being involved in this. They think they're just getting a call from a legitimate freight broker. And then they use that legitimate carrier to go out and get the freight. One of the problems that we see with that is this big spread in where cargo theft happens now, because it's basically become a work from home career choice for these international criminals at this point, right? So they don't have to physically be in the port areas, in those major areas like Southern California, Dallas, Miami that we've seen traditionally. They can now target freight anywhere they want to, because they're just going to send this innocent truck driver to go pick up the freight wherever they want it. So they can concentrate more on what they want rather than where it is. Once they have that carrier pick up the freight, they will then have that carrier deliver it to a cross dock, and then they will begin to launder the freight. So it may go in as televisions, comes out the other side of the cross dock as electronics, and from there they may take it to another cross dock or a warehouse where they're storing it, where they can then take the labels off, create another piece of new documentation for it, and where it comes in as electronics, it comes out as FAK. And we'll see them stand up their own online stores or move it internationally to satisfy that international market that they've created. That's method number one. And the second method that we're seeing is when they're going out and buying MC numbers. So they are a trucking company. They have their own MC number, and they'll go out and they'll deliver 10, 20, 30 loads. But when they pick up the load to deliver it, they take it someplace else. They take all but one pallet off the trailer. They redo the paperwork to make it look like a one pallet delivery. They put the new seal number on the false paperwork, and they deliver one pallet. And they will do that over and over and over again until somebody realizes, hey, we've been shorted 20 loads in a row, all from one group.
This must be an incredibly big industry to support that type of network. So do you have a sense of how much physical freight is being stolen each year now compared to, say, prior years?
Well, so 2023 to 2022 to 2023, we saw a 57% increase in cargo theft, which is a massive jump. Keep in mind, we're going by the CargoNet numbers that CargoNet puts out there, and cargo isn't mandatorily reported in the United States, right? So when you look at the CargoNet numbers, they do a great job of putting together the trends and putting together the charts and telling us what's going on, but it's a sample size. So if their report is based on roughly, I think 2023 was just under 3,000 reported thefts, that is only a portion of what's going on. 2024 is already projected to be higher than 2023, so we're going to see another increase. So we don't know the exact numbers. That's the short answer, because we don't have mandatory reporting. But when you look at that sample size and you see those increases, the numbers have certainly gone up tremendously.
Scott, for our owner operators and our carriers out there, what does this mean for their premiums over the last couple of years?
I certainly can't speak to, the entire industry. I don't speak for the entire industry. For us, what we do is we evaluate, what are you doing, right? What are you doing? Are you aware of the cargo theft problem? Do you know what's going on? Are you keeping on top of it? Are you working with us? Here we have our own special investigations group, which is a group of investigators that goes out and recovers stolen goods for our clients. That team's recovered over $100 million in stolen goods for our clients, but they also teach our clients how not to have the thefts in the first place. So with our clients, we're looking at, are you partnering with us? Are you working with us? Are you putting the right prevention methods in place? If you're a freight broker, are you engaging in some of the new services that helps you vet carriers properly so that you're not becoming a victim of identity theft? And I'm, my estimate is that the rest of the industry is probably looking at those same things, right? So as a client, you have a big impact on what your rates are going to look like based on how are you partnering with your insurer, what actions are you taking, are you staying on top, are you staying current, right? Or are you doing things like you were doing it 10 years ago?
Right.
Yeah. Scott, think about the small operator. Most of our spot market carriers are owner-operated small fleet. What should they be looking for to avoid this, the guys out there trying to scam and launder the loads? What should they be watching for?
Are you asking from the truck driver perspective? If they
what would you recommend that they do?
So when they get that call, they get that random call. If it's not somebody they've worked with in the past, or it's somebody, let's say I'm a carrier and I'm on somebody's approved carrier pool, but they haven't used me in a year or 2 years. Why am I suddenly getting this call? Just start to put, the things together, the red flags, so to speak. Why am I suddenly getting this call? I'm certainly happy to take this load if it matches what I want to do, where I want to do it, and the equipment that I have. But maybe, if somebody says, hey, I'm with ABC Freight Broker, can you go pick up this load in Omaha? Maybe when I get off that phone call, I look up ABC Broker. I make another call to ABC Broker from the phone number that is on the website and verify, kind of go back channel and make sure that the person that reached out to me is legitimately working for ABC Broker. The biggest thing that I talk about all the time is you have to really know who you're doing business with in this environment. You absolutely have to know. If you're a freight broker, you have to know that the carrier that you hired is the legitimate carrier and not somebody stealing that person's identity. If you're the carrier that's being called by a freight broker that you don't usually do business with, or that you haven't had a load with in a long time, you need to verify that that person that called you is legitimate and that they really do work for and represent that freight broker, because that's the environment we're in, unfortunately.
Scott, what about for shippers? What tips would you give a shipper to help prevent some theft?
I think the big thing with shippers is to engage with the freight brokers in more of a dovetailed fashion when it comes to freight security. Traditionally in the past, I think a lot of shippers depended heavily on the freight brokers to do all of that. For whatever reason, I don't mean that in a negative way. I just think that that's the way the system worked, right? But I think in the environment that we're in now, I have a friend, Keith Lewis with CargoNet, who always says, hey, this is a team sport. This really has to be a team sport. The freight brokers need to make sure, if you look at that second scenario that I mentioned where they're shorting load after load, are you as a shipper communicating to your freight broker, hey, there's 22 pallets on this truck, let's make sure 22 pallets gets delivered? Are you just having that extra communication to make sure everything is clear, everything is detailed, right? If you're the shipper and you're releasing freight to somebody, make sure that who you're releasing the freight to matches up exactly with who your freight broker said was coming to pick up that freight. All too often we see a fictitious pickup where ABC Trucking is supposed to show up at 1 o'clock to pick up the freight on Friday, and somebody shows up at 11 o'clock on Friday and says, hey, I'm here for that load. I'm not ABC Trucking, but I work for ABC Trucking, or I represent ABC Trucking. Or they put a false placard on the side of their truck, right? The shipper needs to say, hey, this wasn't supposed to be released until 1 o'clock. I don't think you're supposed to have a cardboard sign on the side of your tractor, right? Let me make the phone call to my freight broker partner. And I really think it just needs to become about better communication between the shippers and the freight brokers over who are we releasing the freight to, what time. Get some verification numbers in there, get a secure release number in there, that if that driver doesn't show up with that secure release number, you're not releasing the freight.
Yeah, so it comes down to communication and verification both ways.
And Chad, the last thing I'll add is we're seeing a lot of trailer modifications. So in order to short loads, a lot of times the bad guys will have nuts and bolts on the door hasp and the hand and the door closure levers rather than the rivets, right? And I understand, we all know how it works, right? The driver stops, swings the doors open away from the dock, back up to the dock. The people on the dock don't really get to see the doors, the outside of the doors, right? So now let's, as shippers, move towards having some equipment inspection. Are we loading a trailer that has all rivets or nuts and bolts, which allows them to open the door without breaking the seal, take off a pallet or two? Don't load modified trailer doors, right? Don't load those modified trailers. Communicate with your freight broker. Hey, the carrier that you sent, the doors are modified. There's nuts and bolts on here. They're going to have access to the freight. Don't want to load this trailer.
Wow.
Chad, this is fascinating. I've learned so much here about how much has changed. It was only a few years ago, Scott, we were talking about 1,200 cargo net claims a year. I think it might have been 5 years ago. Now you're talking about much more than that. But Chad, what's the likelihood someone on a loading dock would do that, would check for rivets versus nuts and bolts?
Yeah, I'm not sure. It definitely adds a step in the process. Most of my experience was in the office procuring transportation, not on the dock, but I can clearly see that it adds an additional step to the process, whereas it's much more efficient just to swing those doors open and back it in, which you can't really, reversing that and going back and checking that adds a lot of time. So I know everybody's running fast and hard, and it's difficult to slow down.
It's generally a fairly hostile environment. Like, it's not the friendliest place to be. So that's based on my experience anyway.
Yeah.
Scott, this is fascinating. I've learned so much again today. I'm so glad we've got you on talking about the scale and scope of this. The physical aspect of stealing trailers, has that changed in terms of your theme about hotspots and working with carriers on known hotspots? Has that changed in terms of the physical movement of a trailer from its location?
It really hasn't. So I think that's a great question, because we're seeing such an increase in that strategic theft side that there's almost been very little discussion about that straight theft side, where they still physically go out and steal that freight. That's still happening, and those hotspots are still the same hotspots: Southern California, Dallas, Houston, Florida, Georgia, that New Jersey area, Chicago area, and Memphis. Now we're seeing that spread because of the strategic theft, but that straight theft is still happening just like it always has. We're seeing a lot of pilferage crews that are what we call follow crews out of California. So they'll follow the driver until they make their stop, and then they'll back up to the tractor and trailer and open the trailer doors and take 3, 4, 5, 6 pallets in a small box truck or in a couple of pickup trucks. And we're seeing that in particular on the Arizona-California border as a newer hotspot. So Arizona recently entered the top 10 as a cargo theft state. And in large part, that's because the drivers are trying to get to Arizona for the lower fuel costs. And once they get across the border, they'll stop at those truck stops that are just across the California-Arizona border. And we're seeing a lot of big pilfer crews hit those spots over there for 2, 3, 4 pallets at a time, which if you have high value electronics, that's a big loss, even though it's not a full truckload. So there's a lot of that still goes on. The straight theft around those port areas, around those major cities, those arterial highway areas where they all come together, like Memphis, they remain hotspots for straight theft, just like they always have. So while the industry is getting a bit distracted on that strategic theft side, the straight theft is still going on.
What can drivers do to avoid that? What are the top tips for them to avoid that type of theft?
I think the biggest thing is be aware, right? Know what you're hauling, where it is, and where are the hotspots for cargo theft. Am I hauling electronics out of Southern California and going to that Arizona border, and is my plan to stop there? If I am, do I have high security rear door locks on my trailer so that it makes it much more difficult? You want to be the harder target, right? Am I going to be a more difficult target to hit, to target, to go in and pilfer 4 or 5 pallets out of the back of my truck? Am I watching to see if I have anybody following me? The same vehicle's been with me over and over again for mile after mile. When I'm parking, am I parking in a well-lit area? Am I trying to find something I can back up against so my trailer doors won't swing open? Am I looking at these? I think just raising that sense of awareness. One of the things we're seeing quite often now is they'll have somebody distract one of the drivers while they'll go towards the back doors, right? So they'll have somebody come up and ask the driver for help with something, or ask a question, or ask for directions, and they're occupying the driver while somebody's getting those rear doors open so that they can pilfer that load. So the minute that happens, we have a red flag here, right? Is that a concern? We always say freight at rest is freight at risk. Right. So where are you stopping? Obviously the best way to prevent theft is to not be stopped in the hot spots. So are you taking your rest in a hot spot, or can you find someplace else to take that rest that's away from those targeted areas?
Makes sense.
Scott, this is a great topic. We need to get you back on to talk a bit more about this. Kind of coming up, bumping on time here. Before I bring you back, a couple of shout outs for what's coming up. And one of the things I think, Chad, we might be able to do is get Scott on the Freightline podcast with Professor Kaplan. I think that might be helpful. Yeah, Terry Donahue's on the next podcast. He's a senior VP with DP World, talking about the impact of the USMCA agreement. That'll be out this Thursday. DATCon, don't forget, Kansas City, October 22. You can register using the code update100 at dat.com/DATCon. Next week's show, we have owner-operator and small fleet carrier owner Josh Rickards talking about how to navigate the current freight market. Scott, before we wrap up the show, how can people get in contact with you?
You can reach out to me. My email is right on my LinkedIn profile. You can reach out to me directly. I'm happy to help and answer questions for anybody who needs some knowledge or some resources that I can possibly direct them to.
Fantastic. You've been a very good guest. Thank you. I've learned so much today. We'll make sure we circulate the copy of the YouTube link as soon as we can get it out via LinkedIn. Those of you that are not subscribed to the show, make sure you subscribe to DAT Freight and Analytics. Set up your alerts for the show at 10 a.m. every Tuesday. With that, another show's in the books. Be safe, be nice to everyone, and we'll see you here next week at 10 a.m. Eastern and 7 a.m. Pacific. Bye, everyone.
Thanks for having me, gentlemen.